At the top of Bybit, under the Trade section, you'll find Futures, which is the futures trading option. When you click and enter, you'll see a screen like this. Some users trade without knowing the functions, but since this involves actual funds, you must fully understand the role of each button before proceeding with any investment. If you are trading futures for the first time, there is a menu called Demo Trading under the Tools section. This is a feature that allows you to practice trading, and through demo trading, you should familiarize yourself with all the functions of each button. When you enter Demo Trading, you will see a watermark that says Demo Trading on the chart. Let me explain from here. The first thing you'll see is the chart area. Here, you can use various drawing tools to annotate the chart. You can freely apply trend lines, Fibonacci tools, and even Elliott wave tools. At the top of the chart, you'll find the timeframe settings. Click on the right side, and you'll see different timeframe options. Select the one you'd like to view. Next to the timeframe, there's the Indicators section. Here, you can add market indicators such as RSI or MACD. Just choose the indicator you want and apply it to your chart. In the middle of the screen, you'll see the order book. It visualizes the orders being placed on the exchange. On the top right of the order book, you can choose the order quantity unit. It allows you to display units ranging from 0.1 to 100. At the bottom, you'll see buy and sell, which help you quickly identify where the order flow is concentrated. On the far right, you'll find the order panel, the most important section. Let's go through it step by step. Before we start, click the gear icon in the top right corner of Bybit. Inside, you'll see a section called Position Mode. Switch it to the second option, Hedge Mode. In one-way mode, you can only hold either a long or a short position at one time. In contrast, Hedge Mode allows you to hold both long and short positions simultaneously, making it more flexible for strategic trading. After selecting Hedge Mode, check the box at the bottom and click Confirm. First, let's click on the part labeled Cross. When you click it, you will see the options Isolated and Cross. Isolated means isolated margin trading, which limits the collateral to only the position amount when opening a position. For example, let's assume you decide to go long with $1,000 at the current price. Once you enter, your position will be opened like this. If the price keeps falling from your entry point and your loss reaches negative $1,000, you will lose exactly that $1,000 and the position will be closed. This feature, where the maximum possible loss is limited to the position size, is called Isolated Margin Mode. On the other hand, Cross Margin Mode uses your entire wallet balance as collateral. For example, if you go long with 1,000 USDT at the current price, the position will be liquidated once continuous losses bring your futures wallet balance down to zero. In other words, unlike Isolated Mode, where the maximum loss is limited to the position size, Cross Mode sets your entire futures wallet balance as the maximum possible loss. Since this method carries higher risk, beginners should trade using the Isolated Margin Mode. Portfolio margin is used when taking hedged positions between spot and futures. However, since the position mode only allows one-way mode, I would not recommend using it. Next to Cross, you'll find the Leverage selection menu. You can set leverage up to 100x, but keep in mind, the higher the leverage, the greater the risk. For example, let's say you want to enter a position with 10% of your futures wallet balance using 2x leverage. If your futures wallet currently holds around $100,000, then 10% would be $10,000. With 2x leverage, let's enter a long position. Once you enter, you'll see that the position size is not $9,900, but instead reflects the amount based on the 2x leverage. In other words, you're opening a larger position with a smaller amount of capital. However, the higher the leverage, the higher the risk, since you're controlling a much larger position with relatively little capital. That's why it's strongly recommended to avoid using high leverage above 10x.